All right. Hello. Good morning, good evening, and good night. I hope you guys are doing absolutely fantastic as always, because in today's video, what we're going to be doing is we're going to be digesting some high yielding covered call strategy ETFs. And we're not necessarily looking so much into KLIP and TSLY, but instead what they do, which are right covered calls. Now I know that TSLY is actually a synthetic covered call strategy ETF, meaning it doesn't really own any underlying asset, which is Tesla. And we're also going to be digesting KLIP, which is the covered call China Internet covered call strategy ETF by Kraneshares. And what we're going to do is we're going to look over some of the pros and cons of covered call investing, when you should covered call invest. I'm also going to go over the FAQ for Yieldmax and debunk how exactly they make their money from their covered calls, because they are different than the normal covered call strategy. And I want to make sure you guys are up to date and know the best positions when you should be buying these two companies. So that being said, before we do get into this video, yesterday, 22 years ago, was the attack on the World Trade Center, 9/11, and I wasn't able to make a video yesterday. As you can see, I haven't made a video in over 2 days, pretty much. And so I want to say just a little note for anyone who was affected. I'm not a US citizen. I'm actually a Canadian resident, but we're pretty much all affected by this event. And I want to say my heart goes out to anyone who was affected by, this attack. Obviously, no one wants to see this, and my heart just goes out to you. So with that being said, I hope we can get into this video and turn this to a positive note. We are actually just crossing that 2,500 subscriber mark. We have 2,503 subscribers. So thank you to everyone who has subscribed to the channel. I can't do it without you guys. This is a crazy milestone. We're a quarter way to 10,000 subscribers. So keep the subscribing coming and keep enjoying the videos. So today we're talking about TSLY and we're also talking about KLIP, but in the sense that they are covered call strategy ETFs. Now, KLIP is your standard covered call strategy ETF. They own an underlying asset, which is KWEB, some shares in the underlying asset, and they write covered calls on KWEB. Now, just to kind of go over what a covered call is. So what is a covered call ETF? A covered call ETF is a fund that purchases a selection of stocks and writes a call option on them to boost investors' yields. They're all about boosting investors' yields, trading potential gains for income. Now, just going to some of the pros and cons. So when should you use a covered call? Now it says when you don't expect the stock price to move that much, because as a trader, you wouldn't want the stock price to be highly volatile. It wouldn't be ideal for the price to rise beyond the option strike price, because then you're not capitalizing. You're limiting at that option strike price because that's the price you feel that it might hit, and that's the premium you're going to get from those covered call options. Basically, you're going to limit your upside by hitting a strike price and not really being able to push your appreciation beyond that, and you're going to collect the dividends and distributions, I should say, from that. Now, when should you avoid a covered call? Now, when you expect the stock price to increase in the near future, you make a relatively small amount of money when you are involved in a covered call when it increases, because once again, there's an option strike price and it will cap your potential gains and turn them into income. Now, there is a complete difference between KLIP and Yieldmax, and that's because Yieldmax, as I said, has a synthetic covered call strategy right here. Each Yieldmax ETF employs an actively managed strategy best described as a synthetic covered call. The predominant driver of the potential income for the strategy comes from selling of short-term out-of-the-money calls. This is how they get their money, out of the money calls. These calls are sold over a synthetic long stock position comprised of a long at-the-money call and a short at-the-money put. Basically meaning they're going long one and they're going short one, and then they sell short-term out-of-the-money calls on top of that, which generates their income. Now, this combination of long and short put options is known as a synthetic long stock position, because synthetically mimics the exposure of being long stock. So TSLY doesn't own any Tesla, but what they do is they write, as it mentioned here in the Yieldmax FAQ, long at the money calls and short at the money puts with a short out of the money call. This short out of the money call, along with US Treasuries, is what's going to generate that massive 50% yield for TSLY. And for them, with Tesla being a volatile stock, it's actually good that they do go up and, you know, move quite a bit, as opposed to the standard cover call where it says you expect the stock price to increase in the near future, and that's when you want to avoid. But the thing with Tesla, they're synthetic. They don't own any underlying Tesla. And so they only look to really mimic the stock price of Tesla, but at the same time provide those kind of distributions and the the dividend gains from covered call investing without owning the underlying. So meaning like they're mimicking the price of Tesla and receiving covered call income at the same time. That's why I like TSLY. It's very interesting and original what they're doing. This is the first kind of like ETF to kind of bring it out, where, you know, they're not necessarily sacrificing so much of the share price for the dividend. Although, you know, obviously when you pay out, you know, 70-cent dividends, the share price is going to get hit quite a bit. But they're looking to mimic the stock price of Tesla, which helps to have a little bit of appreciation. And as you can see, over the long term, if you were to buy TSLY in certain periods, such as when I did at this 1333 level, you could have sold for $18, made roughly 30% on your money, and been receiving 50% dividends during that time. Well, really 6% dividends every single month because it's a monthly paying dividend stock. But TSLY is kind of retracted back to these levels, and it really did capture a lot of the downside of Tesla's current stock price drop, because Tesla is a very volatile stock, almost going down to $215. So as you can see, TSLY pretty much captured all of that and is slowly recovering, not as quickly as Tesla though. That is another thing to look out for. I noticed in the past couple of days, Tesla has risen about 6% or so, and TSLY hasn't been able to fully capture that upside, only going up about maybe 5%, if even 4 to 5%, as Tesla's been moving a bit higher. So that's one thing to watch out for. But KLIP, on the other hand, KLIP is your standard cover call strategy ETF, where you would want basically a sideways or almost downtrending market. And KWEB kind of gives that for them. It is definitely a sideways market. If you look over the past 6 months, you can see we started this past 6 months literally at the same levels, the $28 level that we're currently at. And KWEB, I know a lot of people kind of hate on KLIP just due to the fact that it has pretty downward appreciation. And what I want to do here is just kind of put in KLIP right here just to show you. People really hate on KLIP just due to the fact that the stock price looks like it's pretty much straight down, which it is, but along the way we're receiving that dividend income. And the great thing is the dividend income is outweighing the stock price decay. Now, I actually own about 92 shares of KLIP, and depending on when you're able to buy, if you're able to buy at the $17.74 level, the $17.74 level, then you could be making some really great returns with KLIP, as long as you buy at the right times. You're not necessarily picking the peaks, although, you know, it's not easy to do that, obviously. But KLIP is actually a stock where I definitely should have pulled up my dividend tracker for this one, but it's exactly what you would want a covered call to be doing. If KWEB is able to then appreciate a little bit, then we could get some pretty nice capital appreciation. I know KWEB was up to at one point almost $90 and has been in a bear market since pretty much COVID, because obviously technology took a real ramp up in COVID in China. This is a China internet ETF, as you can see right here. But just kind of looking at their chart, they're in a steady kind of flat period at the current moment. And if they were to return anywhere close to these levels, even at the $50 level, that would be pretty much a 100% return or 80% return at that. And so we would see some pretty big dividends coming into KLIP, and then also some price appreciation, which would drive KLIP stock price to a decent level. That's what I think. So I hope you guys did enjoy this video, got a little idea of when you want to buy a covered call ETF and when you would want to avoid a covered call ETF. I hope you got the message that, you know, TSLY is a synthetic covered call. They are not a standard covered call ETF, and, you know, the difference in that and how they're looking to mimic the price of Tesla and also give you those covered call dividend yields that we all know and love. I hope you guys did enjoy this video, learned a little bit more. If we could learn a little bit more every single day. I know we touch on KLIP and TSLY a lot. I hope you guys do enjoy these videos. I get good feedback from these videos, and that's why I continue to produce them. All right, now, if there is any video that you guys want me to create with TSLY or with KLIP, you guys just let me know in the comments down below, and I'll be sure to respond and get back to you as I do, and pride myself in by responding to your comments. So if that all sounds good, then I hope you guys do subscribe to the channel. If you did enjoy this video, 633 subscribers in the past 28 days, and the videos are doing great. I can't ask anything more from you guys. I hope you guys love this video. I'll come at you with another one hopefully tomorrow, and I will see you guys in the next one. I hope you guys take care and have a great Tuesday.